We got some massive news for Netflix stock, Paramount Skydance stock, and Warner Brothers Discovery stock investors this morning on Monday, as Paramount Skydance went directly to shareholders with another offer aiming to acquire Warner Brothers acquisition. So I'll talk about the developments and what it could mean for investors in all three of these companies.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you probably all saw the news about Netflix agreeing to pay $72 billion or $27.75 a share for Warner Studio and HBO Max streaming business after the company split itself in two. That deal would be a cash and stock deal that was announced Friday. So this acquisition deal that Netflix made for Warner Brothers was under the impression that the company would split itself in two, and the parts that Netflix didn't want, it wasn't going to acquire. So it wasn't acquiring the whole company, it was just acquiring the parts of the company that it felt it wanted as strategic assets. So Paramount tried to warn Warner investors or lawyers in a letter last week that it believed the deal with Netflix wouldn't close because of regulatory roadblocks. However, I don't think Warner Brothers cares about that deal not going through, because this deal with Netflix, even if it doesn't go through, Warner Brothers would get a $5.8 billion breakup fee that's included in this agreement. So should the deal not fall through because of regulatory concerns, as we've already seen comments from President Donald Trump indicating that his administration is skeptical of this deal because of the large market share Netflix already has. And then with the acquisition of HBO Max and the Warner Brothers studio, it would really make Netflix an even bigger and even more powerful company. But Warner Brothers doesn't care, because even if it doesn't go through, they get $5.8 billion as part of the agreement in this arrangement that includes that clause. And these types of clauses are normal. The acquirer usually makes this as part of the deal. If it doesn't go through, the company being acquired gets a big fee, because they're having to go through significant due diligence and processing and all of these other things that are going along. So does this mean that Warner Brothers is going to walk away from the deal with Netflix to go with this new offer? I think that's unlikely, because if Warner were to walk away from the deal with Netflix to strike a deal with somebody else, it will owe Netflix $2.8 billion according to the agreement. So the offer has to be so lucrative for Warner to move away from the deal with Netflix, especially because there is that several $billion benefit that Warner would get if the deal doesn't go through with Netflix. So as it stands, I feel the deal with Netflix is more attractive for Warner because it includes that breakup fee. And I agree that there are concerns that the deal doesn't go through because of market share and the administration being skeptical. There are concerns about that. But at the same time, if Netflix didn't have confidence that the deal was going to go through, I don't think they would have included that nearly $6 billion breakup fee included in this arrangement. So they must have had conversations with regulators or people familiar with these regulations, and they feel confident that the deal would go through. In any case, this is all great for Warner Brothers Discovery, that there's so much competition for its assets and the valuation of the company is being bid up. That's great news for Warner Brothers and Warner Brothers Discovery stock investors. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.